As we get into the stock market, specifically the SP 500 and the Nasdaq 100, we need to talk about exactly where we are right now. And we've been discussing this since essentially the FOMC meeting. And we talked about exactly where we are right now. We talked about this bear flag and how we broke down and how ultimately we're coming down to previous lows established back in June. The question is do we break below this? Do we go further down? Or do we start to balance in how we found a short-term bottom? I'm going to go over exactly what I'm looking at right now and how I am playing the market going into next week and specific things that I will be looking for to trade the coming week as well. Let's get into it. Now, before we get quite deep into this, I have to ask you to consider doing two things: liking and subscribing. Every single day I make videos regarding the market, as you can see, and they're non-biased. I show you exactly what I am trading, exactly what I have traded from this week, and then I tell you what I'm doing going forward. This is all unbiased opinions on the market, and right now I am a liquid. So you're going to hear my God's honest truth about where we're going the rest of this week. Let's get into it. So looking at this, we had Powell speaking a little bit earlier, basically the round table. They were discussing our real estate economy, everything, a broad spectrum of everything happening right now. I ended up closing those Microsoft puts that I had yesterday. And if you look at Microsoft, you can see where it went on the day. This was the only position I had open. I like to start the videos with my previous positions to show you if I had a winner or a loser. And I show winners and losers if you've been here for any time at all. Yesterday, you essentially closed the day dropping back down to 241. And then to start the day, you bounced a little bit, bear flagged, and boom, you ended up coming down to 235. Contracts ended up hitting around 480. I ended up selling mine early this morning around 350 a contract, so I could actually made more of a help throughout the day. But I wanted to secure that profit, and basically going into today, I'm going to show you why I considered sitting liquid and waiting on the market from here. Okay. What we're going to do is go over the Nasdaq, and then we'll go into the SPY and S&P 500. Now, what we're looking at here is essentially just a clear, clean-cut breakdown. And it looks like you have more room to go down right now. I'm just going to tell you that. Looking at the market, it looks like more room is coming for that downside. But I want to just break things down for exactly what I'm looking at. Okay. So when we took our trades, when I was very bearish and I was looking at a lot of potential, downside movement, I was looking at a few things, primarily right here. We were bear flagging going into the Fed meeting. We knew what was going to happen regarding rates, but the question was how was Powell going to react to the market, and was he going to continue to be this hawkish? Spoiler alert, he was. Now, does this mean in a 2-day period that we're going to be bullish? Is that what I'm saying? No. But what I want to show you is the trade that I took and just food for thought on what's happening now. So this is just going to be a quick visual, and then I'm going to get more into what we're looking for, right? And this is really just to make you brainstorm basically what you're doing and how you're trading, okay? So what we're going to do is just highlight this low back from June, arguably where support begins, where you had those triple touches, and then ultimately that last wick down there. Okay, so we can see, where did we get into our position? I want to highlight. When I got into my position, it was about right here, right below the daily open on the Fed meeting day, okay? And ultimate downside was basically back down to your lows that you established down here, right? That's where our quote-unquote lows or room to the downside was, because what did I say from that? I said, I expect us to test lows. Okay, from here. So this is essentially the previous trade, right? Stops above, local highs, entry. Now, it is aggressive saying our target was this low, but I just want to highlight, how much room you had down. Now, today when you opened up the market, I showed something in Discord. And in Discord, if you are trading with me or you're in our community, I'm honest with you 24/7. I am not going to give you stuff just to make you sound happy, because if I lose on a trade, I lose money. I post how much money I lose. I don't really care if I post how much money I lose, because it's my money, okay? It's not your money. So I post this as a visual. If you were to enter shorts and everyone was talking, everyone's getting hyped, they're like, should we enter puts now? We need to play more downside. Well, this is really, if you get down to it, your risk to reward. You're trying to put stops above the daily highs, about right here, and you're targeting lows, which you could have made and profited down towards your low, right? Let's say you sold at the absolute bottom. Even on this trade, your risk to reward was a 1.87. All it is dividing risk by reward, right? On our previous trade, it was a 6. Why? Why was it so much better? Because you had so much more room to get down to those lows, right? Now, Again, am I saying this was a bad trade to short today? No, you might have made money shorting. I made money getting into the market or, selling some positions today. I made money on it, right? But it was not a time to be searching for the shorts. Why? Because you want to have room to get to your targets. I want that to be very clear here. So we had lots of room. Am I telling you to not short the market? Do whatever you got to do. Do what you got to do. But right now, your eyes got to be on buying, okay? I'm just going to tell you that I think more room to the downside is here. I think there's more room, but you got to start flipping from a bearish viewpoint to looking at what's going to happen when you start to find a low here, because let me tell you, I believe we're getting close. So let's get into more of where I see us going and how I see us moving, because ultimately right now is the time for long-term buying for me, for myself, personally. Okay, what's happening here? I want to come back to where we're ultimately targeting. Our ultimate target here is pre-COVID highs. Okay, I want to make that very clear. Right here, this is right before COVID happened. Boom. And ultimately, you still have around $27 to $30 of downside on SPY to get there. Before you get there, you have a few more ranges, and I want to highlight exactly where I'm looking at for that. Now, for here, I'm going to tell you right now, it's basically going to be your pivot high right here. This is going to be my next range to be watching. I want to make that very clear as well. 359 to 355. And ultimately, I thought this is where we were going to test before June kind of bottomed out on us. But, I want to make that really clear where we're going to be going right now. Actually, 359 to 356.20 roughly, right? These are two areas you need to be watching. So immediately when you break below this, I already see us having a strong resistance underneath this around the 355 area, right? So even if we're shorting through this, you're still looking for more support. Now, a big thing I've been talking about here on the channel specifically is how big stocks are reacting to this level as well, right? So a big short position I talked about yesterday and the day before that was Tesla triple topping at 314, okay? And he came crashing down right now. Big trade that Jay Ream was focused on here in the Discord. Now, other stocks like Google, look at what's happening here. You're breaking your lows that you had established back in June, and you're pushing down. In my opinion, key buy range here, $90. I've already started buying some of my longer term positions, so at 100, but 90 is where my next buy zone does start. So I want to make that very clear as well. Going into something further, Microsoft, someone we were looking to trade yesterday, very similar chart to Meta. You broke those lows, you retested, boom, you keep coming down. 232 is our target. We've had that marked out for almost a week now. Meta, what about Facebook? What's happening here? You just keep coming down. You're clearly in a descending channel here. What is the point I'm trying to make here? Is that you've already broken your previous lows on a lot of really big stocks, okay? You're already in pain. And the Nasdaq and indexes haven't even started establishing their new low. So I want that to be known that, one, we're in a very painful market. And this is why I do believe there's more downside on indexes, is because your big stocks are already dropping down to new lows, right? So if your big stocks are dropping, I do expect indexes to drop as well. Very few stocks are holding up, Apple being one of those really big stocks that's holding up very well, but a lot of them aren't. Amazon's getting back down to that $100 level, but you can still see it's holding up very well in comparison to something like Facebook, Microsoft, Nvidia, AMD, some of the more risky Google. Those are all hurting really bad, but your Amazon and Apple are kind of holding the market up, if you will, right now. So I want it to be known right now of some of the stocks that maybe are hurting more than others. And those are the ones that I'm really looking for that long-term buying opportunity right now for myself and what I'll be looking for in the market. So I'll make that very, very clear right there. So when we're going and looking at these, you have to consider that when you're talking about finding those new lows, which ultimately is what I am doing right now, of where the pain is going to start hitting first and which ones are going to get hit the most and which ones kind of haven't been hit yet. So that's what I'm looking at there. SPY, what are we looking at here? Again, so far you've come down into that previous range down here and look at the reaction. Again, you have to anticipate when you're coming down to these key levels that you're going to bounce, right? That's what we mark them out. When you come to a resistance, why do you sell? Because ultimately you expect sellers to step in at that resistance. The same thing with support. You expect buyers to step in at that level, right? So I'm going to go into Bookmap really quickly as well here. And on the day, we had some interesting action, right? A lot of downside, obviously, to get the day going. And then near the end of the day, in your power hour, it's been a lot of buying pressure. Worth mentioning, your CVD stayed green basically since midday. which was very bearish, showing divergence towards that downside. But then obviously in the end of the day, you saw the buying kick in more. Also want to mention your icebergs, level 2 right here, right? So you have your level 2 data, then you have your dark pool, right? And this is showing a lot of buying happening here on this dip all day long. And I told you about this yesterday, that we're really looking to see when this buying steps in, but you know buying is going to occur when you're dipping and falling like you are right now. So we've already known that buying was going to take place, even if it wasn't really necessarily bullish buying, which signals a reversal. It's just people buying long term, because that's what you do as a long-term investor. You buy the big dips, and that's what you're getting. These are buying opportunities for long-term accounts and real investors right now, right? So near the end of the day, what happens as you start bouncing back up? Your biggest order of the day comes for a $3,500 lot downside iceberg, most likely a short position here. Your biggest order of the day, which is almost triple the size of any other order out there. So I want that to be known. So looking at this, again, you're seeing buying stepping in. You're seeing key levels trying to hold here. But it's worth mentioning that there are still a lot of bears out there. And this does coincide perfectly when we look at something deeper, such as, what's happening with the options here. So we're going to go into Qs, what's happening with tech. Still, largest orders are coming towards the downside. Now you're still seeing some buying, and you're seeing some aggressive buying as well, but it's worth mentioning that a lot and a bulk of this order is coming for downside pressure, and now it's being bought even for more dated positions as well, right? SPY, what's happening here? Biggest orders, downside, 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 okay? I'm not lying. Again, I'm just showing you what is out there, the data, unbiased as usual. VIX. People are still expecting more upside here. As we go back to VIX, look what's happening here. I talked about this about a day, 2 days ago. I don't know what day it was. We talked about your ascending triangle, pushing up, pushing up. Guess what? Finally broke above 30. And it looks like you want to go higher, to be honest. I'm just going to tell you, it looks like VIX wants to keep going. But, that's for another day. Still looks extremely, extremely strong. Going to junk bonds. Once again here, risk on, risk off. Junk bonds, ultimate indicator. I told you yesterday. If you were already breaking lows on junk bonds yesterday, we knew new lows would be established today. Why? Because junk bonds are one of the leading indicators on the market, specifically for risk on and risk off. Okay. Next up, your yields, big yields. We always are talking about these, and one of the most important indicators in the market, specifically with inflation. And guess what? You get all the way up to 1.03 on this inversion of the 10 and 30-year yield. Big question mark as to when are we going to slow down here? Because you're going to have yield slow down before you get any type of recovery bounce. And right now, you're just going parabolic. For instance, you are higher than all of your previous inversions, basically, since I believe the dot-com bubble. This was 2018. Then you have all the way back of the 08 crash, which are much higher than right now. And then your dot-com bubble when things got absolutely crazy. And you're on your way up there right now. You're getting there very, very quick. And you're moving rapidly. If we look at how we've moved on these yields today, you basically, over the past 2 days, have gone from a yield inversion up almost 0.03%, which is absolutely ludicrous. The yields are moving way too quick right now. Last up is going to be DXY, which again, one of the best overall tools to see the strength of the market. And the DXY, again, I told you guys down here, beginning of the week, you were bouncing on support. Guess what happened? You took off. So looking at this, again, there's no cooling showing right now on the market. It still looks like more downside wants to happen. And yeah, you got a little bit of a bounce down here at our support, but that's what you expect. You haven't reclaimed any previous lows. You're not getting any significant buying yet. You barely got above the VWAP, people. So you need to be on your guard, really paying attention to what happens here, because if you start breaking these lows, again, we're anticipating a stroke of volatility into the market, pushing us down and finding those new lows, of course, before rounding off and getting a little bit of a buyback. And again, it's worth mentioning, okay? I want you to leave here with this thought. You're going to get another one of these where you bounce up 20% and drop back down, okay? If we're sitting in a real recession, you're going to get more of this, the volatility to the upside. You got to hear back in, August, or you got the real one back here in June, came back and you went all the way back up to your highs, right? And you got another one back here in March, happened again, right? So you're going to get volatility like this, and you're going to have it back and forth. Okay. So that's what I'm trying to do, is prepare y'all for what's happening and where we're at. Now, I anticipate lows will be tested sometime in this coming week, but you're in that range right now. But I want to tell everyone right now, I am liquid right now, getting ready for my next position. And of course, I will share that with you 100%. If you're interested in Discord, the link is down below, but I will see you guys on Sunday.